Hi everyone, thanks for checking in. It's Adam Copen here at Low & Co. Happy New Year to you, and today we are looking at the Wellington real estate data for the last month of 2024. So looking at December 2024, comparing it to the last couple of years and looking at the trends. So overall, folks, Wellington values have been pretty soft again recently. We had a couple of months, 2 or 3 months late-ish in 2024, where we saw some recovery after really quite soft values between the election and sort of mid to late-ish 2024. We saw some strength in sort of a few months back, but in the last 3 months, we have seen values soft again recently, but my message for sellers is if we look at other metrics, which we will obviously review shortly, it looks like there is some positive news on the horizon. It looks like we perhaps are turning a corner. Message for those of you who are buyers continues to be, get in amongst it. There is still plenty of choice out there, so make the most of these good conditions while they are around. So let's get to the details. So median sale price, $765,500 in December versus $809 a year ago. Obviously that's down 5%. Now as far as median prices go, that's quite a big change, down 5%. But overall, the pattern has been for well over 2 years now, since about July 2022, as indicated by that red line, which is the 6-month moving average, broadly stable. A little bit up, a little bit down, but generally it's been going sideways for about almost 2.5 years now. If you follow these videos, you know I don't really pay too much attention to median sale price because it is not just a measure of underlying value, it's also impacted by the mix of properties sold. The best guide to underlying value is the Real Estate Institute House Price Index. So let's look at that now, starting off with what I call the league tables here, and Wellington for quite some time has had the auspicious privilege of leading these league tables for all the wrong reasons. We continue to be the market, the territory, the region in New Zealand that has fallen furthest from the peaks in late 2021. So at just over 24% down still since the peak in late 2021, ahead of any other part of the country. Auckland, not that far behind us at about 21%. If we look now at 1 year results, so again, Wellington at a drop of 4.9% over the last 12 months has fallen further than anywhere else in the country over the last 12 months. So far, not good news. Wellington values have been soft. Over the last 3 months, as I said, going back a few months, we had seen a bit of a recovery. In the last 3 months to December, we were perfectly flat, so zero. Auckland saw a tiny gain of 0.1%, New Zealand on average 0.3%. So only small numbers up or down across the board, but Wellington completely flat after having a small recovery previously. So let's look at a bit more of the detail. You can see the shape of the graph there. So as you can see, the orange line is the best one to look at. That's the cumulative 3-month rolling total. And you can see throughout 2023, we saw a recovery after a weak 2022. Approaching late-ish 2023 when the election took place. Then it started weakening again as we saw a ton of property come to the market and buyers stepped back because of the uncertainty in the labour market after the election. And so things really weakened and we saw soft conditions, values deteriorating throughout a lot of 2024. Late-ish 2024, from about August onwards, we saw some decent recovery. And then most recently in the 3 months to December 2024, absolutely flat at zero. So yeah, Wellington 5% down over the last 12 months, completely flat over the last 3 months. So digging into the various territorial authorities, the Hutt Valleys, the Porou and the Wellington City, over the last year, Wellington City in particular done really quite badly at a drop of 7.7%, and varying degrees of weakness across the other territorial authorities. Over the last 3 months, it's a bit of a mixed bag. Of course, the smaller the time period and the smaller the territorial authority, the area that we're talking about, the smaller the data set, the more variable the numbers get. So we don't get paid too much attention to that. It's quite a mixed bag, a bit bouncing all over the place. Looking now at Wellington City, so you can see by the shape of that graph there, it's way more variable, up and down a bunch more. The troughs tend to be a bit deeper, the highs tend to be a bit higher. It has been following very much the same shape as the Wellington region. So you can see there again, 2024, quite a weak market. We fell to sort of 5%, 6%, 7% down over 3 months into sort of middle of 2024. Then a decent recovery, and then again 3 months to December 2024, back to zero effectively. But over the last 12 months in Wellington City, a drop, as I said before, of 7.7% in values. That is quite a bit of a drop. So moving on now to new listings. This is fresh supply coming to the market. 189 in December versus 233 a year ago and 209 2 years ago. So that's sort of 19% down on a year ago, 10% down on 2 years ago. But compared to what's normal in December, which is an average of 373 over the last 10 Decembers, 189 is almost half of what is normal for long-term averages. So really, the numbers coming to the market in December were really very, very anemic. And if you look there at the red line again, you see the overall trend that we've been following. Coming out of the election, we saw enormous increases in new stock coming to the market. As I say, at the same time, buyers pulled back, and so that's what made the really soft market conditions throughout the most of 2024, and we saw values falling. Late-ish 2024, that's trend reversed, and we saw new listing volumes starting to come down. So again, after a massively steep increase in new listing volumes, ton of property coming on, then it fell quite steeply in the last 6 months of 2024, and that of course is what led to the better market conditions, the arrest of the price drops, a little bit of a recovery, and then softer conditions again. So the supply coming to market has been falling steeply in the last 6 months or so, but certainly that month of December, very, very low supply levels indeed. And if you see this, the next graph showing you there the amount of supply coming on compared to the same month 12 months ago, and in December there you can see 19% down on the previous December. That is the first time we have seen supply levels falling below the level they were at 12 months prior for about 12 or 13 months. So as I said, this is perhaps a sign that things are changing, things are turning, the tide is turning in the direction of favour for the sellers again. So that's good news for sellers. Number of sales, 553 in December versus 562, so almost identical a year ago, and 469 2 years ago. So quite a lift on the number of sales taking place 2 years ago, but about the same as 1 year ago. Again, often find that it's the red line that gives us the best guide as to what's really been happening, the underlying trend. And it is a consistent theme here, excuse me, that for the last 2 years or so, we've seen gradually increasing levels of number of sales taking place. So whereas we've seen massive changes in the amount of new listings coming to market, huge increases followed by steep declines again, we've seen a really steady underlying increase in the number of sales taking place. Now, overall, that's good news for sellers, but while the trend has been an increasing number of sales, it still is on the low side. So, we've only just recently sort of crept up above 600 on average on a 6-month moving average basis. The December average of 712, we're still well short of that at 553. The overall trend is improving. It's more sales taking place, but it's a trend from a low base, and we've still got a way to go before we hit what we would consider to be normal sale volumes. How long is it taking to sell? So 42 days in December versus 31 a year ago and 43 2 years ago. So about the same as 2 years ago, quite a bit longer though than 1 year ago. Again, the red line tells us the story of the trend. Over the last 12 months, we've seen it take generally longer So that's not good news for sellers. But the last couple of months there, November and December of 2024, quite a drop down into the 41, 42 days sort of duration versus the 45 to 50 days that we were seeing in the 4 months prior. So sort of July, August, September, October was taking quite a lot longer. So that's an improvement, and as I say, again, perhaps a sign that we're turning a corner in favour of sellers. Inventory, so 12 weeks worth of supply in December versus 14 and 22, the previous 2 Decembers. So at 12 weeks, that's quite short supply, and shorter than both Decembers in 2023 and December 2022. So again, the red line shows us the trend. We were seeing increasing levels of inventory, not good for sellers, but the last couple of months, a decreasing inventory. Good for sellers. Again, perhaps we're turning the corner. And at 12 weeks, that is definitely below the long-term average of 15. However, the last 10 years, we've had an average of 10. So at 12, it doesn't seem like an undersupplied market. It doesn't seem like a seller's market compared to what we're used to over the last 10 years or so. But the trend, again, in the last couple of months, is favourable for sellers. How many listings on Trade Me? 27.99 as of a couple of days ago versus 23.51 a year ago, 25.06 2 years ago. So yeah, more than the same time compared to a year ago and 2 years ago. Again, the red line is giving us the best guide as to what the trend is there. You can see we're at high levels compared to the last 10 years. If you dig into the blue bar chart, you can see there that we dropped off a bit as we headed into Christmas. That's normal. Very few listings come into market at Christmas, but sales continue to take place until kind of a week or two before Christmas. As we come into January, we've had very few sales take place yet, but the listings are coming on for the new year. So we start to see an increase in supply levels. This is just normal for the season that we are in. And again, there you see it compared to 12 months ago. So yes, we're more than 12 months ago at 19% more, but the extent to which we have more supply on the market compared to a year ago is less than we've seen for about the last 10 or 12 months or so. So in summary, folks, Wellington values have been weak over the last year or so. We saw a small recovery late-ish 2024, but have been flat again over the last 3 months. New listing levels are down, really significantly down in December, really anemic levels of supply come on in December. Early signs are, at Low&Co here at least, that the listings coming on in January are quite bountiful though. There's quite a lot of new listings coming on for us at least. Sales volumes continue to gently increase as they have been doing for about the last 18 months or so. Duration to sell is up versus a year ago, but down over the last few months. So that's again, sign that we might be turning a corner in favour of sellers. Inventory levels are down. That's good news for sellers. Trade Me listings are up versus a year ago, and of course up versus very recently as we see more supply coming onto the market in the new year. Message to sellers, yes, values are slightly lower than we saw a year ago, but we are seeing several signs there that perhaps we might have turned a corner and things might be heading back in their favour. I'm not suggesting values are going back up anytime soon, but in terms of liquidity and ability to sell and that sort of thing, things look like they might be getting better. Message to buyers is the same message that for a long time now. There's a lot to choose from. Get in amongst it. And of course, big thanks as usual to Real Estate Institute and realestate.co.nz for the core data that I use to draw all these graphs and so on. I'm Adam at Low&Co. If you do want individualised advice, please reach out. You know how to get me. Thanks for checking in. See you next month.